Good morning. My name is Mike Alexander, Managing Principal of Private Trust Management Group, Pasadena, California. We are a firm of professional fiduciaries as well as registered investment advisors. We provide estate and trust management services as well as investment management services to lawyers and families throughout Southern California. Today, we're going to have an opportunity to talk about one such trust and a group of properties that we were called upon to sell starting about a year and a third ago. And that's where we met Neema Ahadian here. Now, we're going to introduce Neema to you in a moment, but first of all, I'd like to introduce you to Patricia Alexander. Tell us a little bit about yourself and how you came to meet Neema Ahadian of the Neema Group.
Good morning. Happy to be here. Well, it all got started approximately a year ago in June when a trustor happened to pass away, leaving a widow and 26 commercial properties. And the decision was made that this was a bit too much for her to manage, so I came in as co-trustee. Acting in the capacity of co-trustee, we met Neema Ahadian, who was an expert in the sale of these types of properties.
At least that's what he told us. Yeah. All right. Neema, I'd like to introduce you to Neema Ahadian, the broker who represented us in this very complex transaction. Neema.
Thank you, Mike. Thank you, Patricia. My name is Neema Ahadian. I'm a senior managing director with Marcus and Millichap, and it's been a pleasure to work with you guys and to work for the Armour family. It was quite a challenging transaction with over 600 apartment units, 26 buildings in different geographical areas in Los Angeles. And we're going to talk a little bit about the story and how we got through this challenging transactions, but ultimately had a successful close for all of them.
Exactly. Just to give all of you a little bit more background on this, we were called in by the director of a bank, our bank, who is also a lifelong friend of the decedent, and we ended up meeting with him just 2 or 3 weeks before he died. The man passed away in early June, and leaving this entire trust estate of his, which was already in a state of liquidation. We were called upon to step in almost immediately to manage this transaction. And what's interesting is that Neema actually had the relationship with the decedent before we came on the scene. So that was our first opportunity to get to meet each other. And it was really very complex. We are a firm of professional fiduciaries. That means that we have to step into these situations and act as trustees and as executors and probate and that sort of thing. So when we begin to liquidate property, we have to adhere to a very, very high professional standard, a fiduciary standard, and that means that the persons that we select have to be equally professional. We have to vet them. So we went, even though you had a personal relationship with them, we began the vetting process, talking with other brokers, comparing fees. And suffice it to say that at the end of the day, we decided to hire you. Of course, you had the full services of a major commercial real estate brokerage, Marcus Millichap, but the key deciding factor was your relationship with the decedent. In fact, I think you had sold him some properties before.
Yes, we sold them, I believe, 5 of the 26 buildings in the last few years.
A broker's dream, you get to sell them twice, right? So you were familiar with that. And your fees were very competitive under the situation. And then we began a process. How many properties total did you say that we sold?
So there were 26 buildings that the family had owned. And if you remember in the beginning of the process, but before you guys had engaged us for the sale of the properties, we had taken the portfolio and broken down into different categories depending on their location, their age, the type of construction, and really importantly, we had a very deep relationship with the owner's lender. So we tabled all the prepayment penalties on these properties because they weren't planning on selling. And we had to include that in our analysis of which properties to sell later, so the penalties wore off. So there were 26 buildings total, and we transacted in 4 separate groups, 4 separate portfolios.
Amazing. Patricia, you were the one, I'm doing all the talking, but Patricia is the one who actually handled all these escrows.
Yeah.
How many escrows have you handled plus our regular practice in the last 12 or 15 months?
Oh, probably about 30 escrows.
Right, so you really got a baptism by fire in, we'll call it commercial or residential income. Tell me about working with Neema and the issues that you guys encountered, problems, solutions, surprises.
Certainly. As I got to working with Neema, it became very clear that he really knew what he was doing, that he was an expert in the area, and that really made a big difference. It was also important to note that the escrow company that he happened to pick was also very, very knowledgeable in these types of transactions. And these are not easy transactions. Some of them were very complex, including 1031 exchanges and all that sort of thing. And this escrow company was able to handle those exchanges without any delays in the closing of escrows, which was very, very important. Certainly the way Neema grouped these properties was important as well. So that made for a smooth sale in that rather than having 26 individual escrows to deal with, we had 4 major escrows with say 5 properties in one, 10 properties in another, according to the way they were grouped by location. And that certainly made things much, much easier.
Yeah, and that escrow company is Wilshire Escrow. And as Neema, when you sat down to look at these portfolios, you obviously weren't going to sell them all at once, nor were you going to sell them individually.
Right.
You decided to sell them in portfolios, and part of your choice involved determining what the prepayment penalties were
Sure.
and reserving those to later. But you also ended up grouping them because of your knowledge of the market. And I think that was key. And right here we have, for example, the Armor collection here, which was one group of them. Beautiful, expensively produced. We got our money's worth on that one. Then another one, the so-called Mid-City collection, that we did was very interesting and helped you and us to identify players. What I found most interesting and the thing that I really learned about you and your business was that high-end real estate brokerages are not only selling the properties and marketing the properties, you guys also are kind of market makers. That is, you're dealing with many of the same people all the time, and you know where your buyers are.
Sure.
Almost. Talk to us about that process, if you would.
Sure, I'd be happy to. We, when we marketed the properties, we took them out, we actually marketed them individually, as individual properties and as a bulk. And the reason why we wanted to do that was I wanted to make sure that you guys had the transparency between the delta and pricing. If you were to decide to do 26 escrows, which would have been a little bit more challenging for all of us versus just doing the 4 escrows of bundling the properties together. And we realized through our marketing process, which we cover all the angles of heavy phone, email campaigns, video presentations, property tours, hard mail, we cover everything. The delta that we saw from selling the buildings individually to selling them as a bulk was, I believe, less than 5%.
Right.
And the probability of a successful close with a buyer that's able to provide an offer without any contingencies or minimal contingencies. And if you remember on the Mid-City collection, they had passed through $1 million non-refundable upon execution of the contract.
Yeah. Let's stop and talk about that. This was another thing that we learned. You know, one thing I don't think that we mentioned here so far is that this portfolio of properties had an estimated market value of maybe $120 million. That was our forecast. So one of our first challenges was trying to figure out what this portfolio was worth and how we were going to expose it to the market in such a way as to get the maximum price for it, but also to identify buyers who could perform.
Sure.
And if there's anything that was a revelation to me was how you selected these buyers and who you let buy.
Sure.
Yeah, and these players came in, and you managed to draw a lot of offers, and they ranged quite a bit. Why don't you discuss the process that you use to help us
Sure.
as your clients to understand how to look at those numbers that were coming in?
It's a great question. Thank you for asking it. We take great pride in controlling the process and holding the line, because every buyer wants to get in contract, and all they want to do is get the seller's attention and lock the deal up. But Patricia and I had some challenges with having two separate management companies,
Yes.
two separate sets of books.
Right.
One of the managing companies didn't even have any of their files electronic, so we had to scan 10 big boxes of all the due diligence. And we gathered all this information up front to learn of the roadblocks that we're going to be having in the future. We discovered we had 4 pending lawsuits against the ownership that we had to disclose, and pick a buyer that's able to absorb those lawsuits or at least be comfortable with what was happening. We toured all the buyers personally through each of the buildings. We actually rented one of those big Mercedes Sprint vans,
Right.
drove them around, and that's part of our interview process of the buyers, understanding how are you looking at the real estate? What concerns you? What doesn't concern you? And what questions are you asking us? Because the ones that are the most engaged are the highest probable buyers. And they're the ones that were asking the diligent questions to provide a smooth transaction at the end. Where the ones that just wanted to get your attention really weren't studying the financials or the roadblocks that we had. And ultimately, we picked a buyer that was on these 4 separate groups. They understood the pros and the cons, and they're able to provide an easy transaction for us.
Now, Patricia, you're the one, as the fiduciary, who has to make the actual decision on how much to sell these properties for. So Neema was coming back to you sometimes with offers that varied by several $1 million. And sometimes you ended up accepting an offer that wasn't the highest. What were the factors from your perspective that went into that, and how did Neema and his group help to walk you through that process, enabling you to make a prudent decision?
Well, as in any real estate transaction like these, it's not always the buyer with the highest bid. It's the one who can actually complete the escrow and close it. And with the analysis that Neema was able to provide in knowing some of these buyers because he had dealt with them before, he knew the ones who would actually perform on their contract and those who might be an issue. So it's not always how much, and so to have the properties tied up in an escrow and that's not going to end up closing and lose that sale time, that's a very critical issue when looking at these things.
I was going to just mention, and just as a reminder, Patricia and I were working daily on, once we selected the buyer, and the challenges came then, where we had elevators that weren't working, properties that were in REAP, we had city inspectors, trying to get in the building, and there was a fire in one of the buildings on Hoover.
And someone died in another unit.
Oh, that's right, we had a passing.
You forgot about that.
We did forget about that.
Right.
So those challenges are what comes up in a 600-unit portfolio.
And I think what was important was the way that you had grouped them, Neema, because buyers couldn't just be picky, oh, I'll take this one and I don't want that one.
Right.
And some of these buildings, as you just said, were a bit of a challenge. And what was also important was this not putting all of the buildings on the market at the same time, flooding the market with 26 pieces of property. So I think that the way you grouped them and the way you went to market with them was very strategic.
That was with your guidance, both of you. Thank you.
Yeah, one transaction in particular that I recall, it was one of the last ones. The exact numbers escape me right now, but I remember that we had one offer that was $3, $4, $5 million more than the offer that we ultimately accepted. So from our perspective, we said, well, how in the world, Neema, you recommend that we make accept the lower offer. So how in the world do we defend that? Well, you walked us through and you demonstrated how the higher offer wasn't a real offer because you knew that this guy really had not done his full and complete due diligence yet.
Yes.
He had conditioned his offer in such a way that he would be able to complete that due diligence. It was going to take time, but you knew that once he completed that due diligence, his offering price was really going to come down a lot closer to the one
Sure.
that we had, which I think was about 33 million.
Exactly. 33.
And it was a real offer, and the guy had very few contingencies and was actually ready to perform.
Yes.
And so what appears to be a higher offer is not really higher or better anyway. But you can't make these decisions as a fiduciary
Right.
if you don't have something to back it up and
Sure.
somebody to guide you through it. So for those of you who might be watching this presentation and who are fiduciaries or work for a corporation, these are just a few of the factors that are there. Inexperienced brokers actually won't be able to tell the difference between a $33 million offer and a $38 million or whatever it happens to be, and be able to determine what the real offer is and the contingencies. The other thing, why don't you talk for a little bit, if you would, how you and Neema work together in the removal of contingency. That's a black art. How you guys do it. But why don't you talk about that a little bit? I found it very interesting.
Well, these properties were very interesting, and a number of them had to be retrofitted. So that threw a whole nother wrench in this
Sure.
in this business. And some of them at the time were already in the process of being retrofitted, and then there were others that weren't. So reserves had to be made, and
we also had, because of the soft story, the family had engaged a soft story company to retrofit 10 of these buildings, but they were in the middle of construction on all these properties. So Patricia and I were able to engage the retrofit company to be able to transfer the contracts over to the buyer,
Right.
and prior to the close of escrow, discover exactly what amount was remaining and what work was remaining, and to credit the buyer that dollar amount, but have them continue the work because this was a city requirement for all these buildings.
Right. I'd like to talk a little bit about that. What we encountered a number of situations where if the buyer waited for us to complete all of our jobs, that is to remove every city problem, every regulatory problem, every rent problem, every lawsuit problem, these deals would never have been closed.
No.
And what I found interesting was that you had selected the right buyers who were very sophisticated. So the people that run around with that kind of money know what they're doing with that money, and they have a higher tolerance for problems with the property than a straight individual investment buyer
Yes.
who might be buying something on their own account for 5 or 10 million. They might be a small buyer. They might be more sensitive. But because you'd picked the right buyers who were sophisticated, we were able to move through. They would be able to pick up contracts, transfer them, and remove the liability from the trust.
Yes.
Because that was a big thing when we ended up selling the property. We needed to be done with it.
Right. We didn't want to hear from them again.
That's right. Because it's a substantial trust. We have a lot of exposure. So closing off that liability with contracts was important, and your relationship with them was good enough to induce them to enter into agreements with us, many of which were to be performed after the close of escrow.
Yes, that's right.
So they took your word, basically, that we would do what we said we would, and that everybody could close it. Because those guys also represent investment funds or institutional investors, whatever, and they had to close too. So it was important that the people were selected to work with each other were all of a certain caliber.
Yes.
And we found it easy to make an orderly liquidation of the property and to make difficult decisions faster in all of that. So we found that it worked very, very well. You know, looking back at these transactions, we've had a lot of conversations over the years. And one of the things that characterized this was that you guys were in daily communication. I mean, sometimes you were on the phone to us here half a dozen times a day dealing with things. And one of the major issues was the condition of the properties. Why don't you talk a little bit about that, you guys?
Well, where do we begin?
We had so many speed bumps.
Yeah.
Do you remember the Burlington property where we had the REAP issue?
Oh, absolutely.
Now, for the audience, what is REAP?
Oh, Mike, REAP is a city program that will monitor and control the rent the tenants are paying, and they basically mandate the tenants to pay the city until the building is clear of any violations.
Basically, if a property is out of compliance, the city of Los Angeles claims the right to basically take it over,
Exactly.
manage all the contracts, collect all the rents, and then you, the owner, you get the money, if and when they think that you're entitled to it.
Sure.
And basic bottom line, if that property is in REIT, you can't sell it.
No.
No investor will take it. So this is what sounds obscure to the average person is a 5-alarm fire in the middle of an escrow. So go ahead.
Well, so of course, along with everything else that could go wrong, we also, we had the death and all this fire and all that. So we also had REAP issues. And this one building in particular, there were a number of repair issues that had to be completed in a very short period of time, or the escrow wouldn't close. This would hold up a 10-property escrow, this one building, if we could not get past the inspection, which was actually scheduled for several days before the close of escrow. So this entailed day-to-day, hour-to-hour follow-up with the management company to ensure that all repairs had been done, and not only the repairs that had to be done, but you've got tenants in there breaking other items, causing more repairs. So even if they come out and inspect and say, this is what you've got to do, well, you can do all those things, and then the tenants are constantly causing other issues.
Sure.
So it was the babysitting of that whole process to ensure that we did pass the inspection 2 days before the close of escrow. So escrow was able to close on time.
There's another thing that I think that somebody who's thinking of marketing their residential income property or any kind of commercial property, and trying to determine how to select a broker or a real estate firm to represent them. One of the things that we find that distinguishes brokers is how hard they work us. So a lot of times people, brokers, particularly in residential situations, will put it on the market and think that the MLS is going to do the job for them. It doesn't. And in the sale of income property or commercial property, it really doesn't. And one of the big challenges that we find is producing the rent rolls, which are the real ultimate due diligence. For those of you who sell this kind of property, you know what we're talking about. But the production of those rent rolls, auditing them, ensuring their completeness and accuracy is extremely important, because if that process isn't managed, then you could end up with an inadvertent fraud on a potential buyer.
Yes.
Who will come back and either pull out or come back later and say, hey, look, you gave us bad data.
Right.
And in this case, Neema and his group, the Neema group, I think you call it, within Marcus Millichap, successfully managed that process and relieved us of untold hours of so-called due diligence, and working with at least one very challenged management company that will remain nameless here, and help to smooth it. Because once again, once we close the sale, it's important that we're done with it. Last thoughts, your abiding impression of working with Neema over that period of time. Patricia.
Looking back on it, I'm really impressed that all the properties were in escrow within 6 months of when we listed them. And that is a real accomplishment on the part of Neema and his group. Actually, the last escrow ended up closing 1 week before the whole COVID hit. So we felt very, very grateful that that was able to be accomplished.
I found it also very quite interesting, our ability to get these properties closed timely, with minimal, if any, requirements from the ownership and the sellers. And I'm very grateful, and this process has proven that working with professional and educated trustees and fiduciaries that were so highly involved in the process, and the daily interaction that we had truly made it an experience that I'm grateful to be a part of, and I think the family has benefited from your help as well.
Thank you.